Hi, and welcome to another video here at StreetSmartOptions.com. Hey, folks, if you're looking at us at our YouTube channel, do us a favor and make sure you're a subscriber so you don't miss any of the timely data that we put out in these free videos. If you're watching us somewhere else, go ahead and join us at our free Facebook group. You can find us on Facebook. Just search for Street Smart Options Group, but the actual address is facebook.com/groups/Street Smart Options Group. So tonight we're going to talk about a posting that Jonathan actually just did a little while earlier today, and he was talking about Microsoft. So folks, one of the things we do here at Street Smart Options is we keep our eye and our ears open to what's new and what's happening out there in the market, but we also focus on, very, very solid stocks that have been around for a long time, companies that are already established, and ways that you can just continue to make good investments and good trades with your options so you can continue to make money. So having said that, I'll turn you over to my partner, Jonathan Sherman. Go ahead, Jonathan.
Thanks, Jim. Yeah, so Microsoft, everybody knows, of course, they have the legacy operating system business, which is their giant cash cow that's just not going to go away. They are an entrenched monopoly in the desktop and also in the server business, right? Their software is ubiquitous. It's everywhere. So they have that baseline, all this cash coming into that company. And the question is, okay, they're this big company with lots of revenue. Well, is there any growth, right? Because the stock is not going to go anywhere if there isn't any growth, right? It can be a good income play if they, if they had a big dividend, and then they could all this cash they could give away to the shareholders. But that's one reason to own a stock with a lot of cash flow if they have a big dividend. But Microsoft has actually been a earnings growth play over the past 2 years. They have invested heavily in cloud software and also in artificial intelligence, and are taking market share in the cloud software space. So now you just need a dumb terminal on your desktop, or a company doesn't need a big computer system in their space. They don't need PCs everywhere. They can just use the cloud offering at Microsoft and have tremendous power, have tremendous capabilities. And Microsoft obviously has the trust name factor there, so companies trust them, and they're doing well in this cloud software space. And so they recently had a strong earnings report just in the past 2 weeks, and the stock which has been in an uptrend for the past 2 years. And you can see here, this is a chart that we posted today in our group, and maybe I'll go to a bigger chart so you can take a better look at it. And this is Microsoft since 2015, and you can see that in late 2014 to early 2000 to I should say late 2015, it just went sideways, and then it went up a little bit, formed another base, and then started on this upward trajectory as analysts and fund managers realized that there was growth ahead for Microsoft in this cloud area. And so if you look at the earnings and the sales for the company, we go to Yahoo financials here, and you can see that looking at 2014, 2015, 2016, 2017, you look at the annual revenues in this company, and they've gone sideways, right? They did 86 billion in 2014, and then they did 89 billion in 2017. So revenues did nothing. And if you look at the bottom line, which would be like net income, you can see net income did nothing also, right? So unless they were doing massive share buybacks, as a shareholder, you weren't too happy. And Microsoft stock really didn't do much for that time period. And then they started to move recently because of expected earnings growth. And sure enough, in this latest quarter, it confirmed what analysts and fund managers have been thinking, that earnings growth was coming. And so we can look at the latest earnings report right here. And this is the press release by Microsoft. And you can see that revenue increased 17% on the quarter, ended June 30th, 2018. And operating income was increased 35%. And so those are big numbers for Microsoft. This is a company that didn't grow at all over the past 4 years. And all of a sudden, look at all this growth. And all that growth is coming from their cloud offerings. And one of their major drivers was this cloud offering called Azure, Azure. And we can skip ahead to the Azure page, the Microsoft Azure page. And you can read that Microsoft Azure is an expanding set of cloud services to help your organization meet your business challenges. It's the freedom to build, manage, and deploy applications on a massive global network using your favorite tools and frameworks. So it's good to have some, good to have some background on what's going on, to have some courage to actually step up to the plate and, do something with the stock, right? You just don't want to go into a stock and just, look at the chart and say, well, that looks decent. Let's just do that because the chart looks good. Well, it's good to have some background so that you have some stamina. If the overall market goes into like a minor correction, you can say, well, if the market's not going to roll over entirely, this stock's going to come back because they have some stuff going for it, right? Now, the stock, as an investment right now, I'm not saying go out and buy Microsoft for your IRA. It's an expensive stock. We can go look at some of their metrics, right? And for a big company like this, they got a forward PDE of 22. And that's price to earnings. So, that means they got to maintain a growth rate of over 22% to even, to kind of justify that. And, at the size they're at, which is 100 billion revenue run rate, it's going to be hard for them to do that. And then, enterprise value to earnings before interest, depreciation, amortization here, 21, which is a 21, is quite high for this company. Better would be somewhere around 12 or something like that, right? So it's not a cheap stock, but for an options trade and for options income, it's a great stock, right? It's been in this uptrend. You go back to the chart here, and all these great fundamental factors have been supporting the stock. And this here is the blue line that is the 10-week moving average on the weekly chart, and you can see it's just been finding support at that 10-week moving average for the last 2 years. It's been in this uptrend for like 2 years. That's a long uptrend. It's going to run out of steam eventually, right? But the latest earnings report, which was just a couple weeks ago, the stock just did nothing, right? It had already anticipated the earnings report, so it didn't go up at all. But also, it didn't sell off at all either, right? So the investors in the stock are holding on, and so we looked at the stock today, and we're going to do a bull call spread, right? What we're going to do is we're going to buy the 90 strikes going out 2 months, October 19 calls, and we're going to sell the 100s. And so there's about $1.10 profit on that spread, which comes out to be about a 57% annualized return on the amount at risk. So it's not a home run kind of trade. It's just one of these grind kind of trades that you can do on a regular basis with Microsoft in between earnings reports, because I wouldn't want to do this over earnings, right? So earnings just came out. The next earnings report isn't due until like October 29th. So this is like this interim period here. We have 2 months, and we can just make this nice profit that should work out as long as the market holds up. Because the spread is the 90-100, and if you look, it's under that 10-week moving average there. And so it'd be unlikely for that stock to settle into that 90-100 range before those options come to expiration in October. In October. So we like the trade. It's an easy trade. And this is the kind of trade you can do over and over and over again in a big cap stock like this that's trending, that has improving fundamentals, where analysts' estimates have been going up a little bit at a time. And as long as the market's in decent shape, as long as the market's not rolling over, because this kind of trade, of course, won't work if the market's in a bear market. But that's all I really have to say about Microsoft. And it's an interesting trade right here. And it's certainly the options. They trade a lot of volume, very easy to get in and out of a spread like this. And so that's what we did today.
Fantastic, Jonathan. Appreciate that information. So again, folks, if you're not a subscriber on our YouTube channel, we'd really appreciate you becoming a subscriber. And if there's something you'd like Jonathan to take a look at and shoot a video about, send us some information. You can also do that at our Facebook group. And if you haven't looked at us as a company, we're at streetsmartoptions.com. come on over and take a look at what we offer there. There's some information on that website that you can get for free as well as some information about what we can do to help you with your trades. Thanks and have a great day.